I've got the secret to winning in this real estate market. And I'm not saying that as a brag. I'm saying that because I continue to see my clients win, and they've got one thing in common with what they're doing in this market. Stay tuned and I'll tell you what it is. All right, let's get straight to it. Creativity is winning in this market. If you're looking to get pre-approved so we can get creative about how you're going to structure offers, go to greatmortgagebroker.com. My team is licensed in 48 states. We're happy to help. Greatmortgagebroker.com. So I'm making this video because when clients of ours win, I get excited. Trust me, this energizes me more than anything else. And I've got multiple different types of clients when it comes to mentality, when it comes to mindset. And the mindset of the clients I have that are winning have the mindset they're going to go out and they're going to find a deal. They're going to create a winning situation by getting creative. They're not just looking at real estate and mortgages at face value and saying, you know what, now's not the time for me because of X, Y, or Z excuse. They're going out there and they're finding ways to make it work. Negotiating credits, structuring buy downs, all the things that allow you in really any market to win if structured correctly. Just like in a lot of different businesses, right? There's going to be winners and losers, and the people who are proactively looking, proactively thinking about ways they can win are the ones that are going to win. In today's video, I'm going to show you a screenshot of exactly how we structured this last deal. I didn't, I obviously took out the names and I took out the location so that we protected the privacy of our clients, but the exact structure on a deal. So you can't tell me that it's not possible. You can't tell me that it's not happening. And I think that more and more of this stuff is coming with rates higher than they've been in past years, and with a lot of buyers, quite honestly, pulling back because of their own self-limiting beliefs or because of, true affordability issues they have. It's going to be a great season for buyers who are willing to think a little bit and get creative. So before I show it, know that not all price points, not all markets are going to allow you to get the seller credits to structure a buy down. But in this case, and really, I think the more expensive stuff, the sellers are more willing to give credit in a highly desirable area that the buyer is excited to, quote unquote, house hack. Live in one side, can rent one of the bedrooms for $2,500 and can rent the other side of the duplex for, I think, something like $7,000 a month. So going to be living there and receiving $9,500 in revenue, trying to figure out the best way to structure the offer, the deal, and the mortgage. If it was just a face value type person, they might say, well, rates are 6.25%. And at 6.25%, my payment is this. I don't know if this looks like a great deal because, sure, I'll be living for free in this nice area, in this nice duplex, but it's not truly a home run type deal. Well, when you structure it the way we structured it, it sure looks a lot sweeter. This requires a lot of seller credit at this price point to do a 3-2-1 buy down, meaning in year one, the rate is 3% lower. In year two, it's 2% lower. In year three, it's 1% lower. Then years 4 through 30, the rate is fixed. 299, 399, 499, and 599. That's what gives you these different payments for the different years. Now, if you just went 6.25, like I was talking about, and had a $9,200 payment, this deal doesn't look as sexy as it does when you structure it this way. So, able to negotiate seller credits, which are actually more than the $50,000 needed for this buy down. To do the 3-2-1 buy down takes $50,000 in seller credit. Know that if you do a 3-2-1 buy down at a $400,000 purchase price, it's a lot less. You can count that it's a third of this deal roughly, right? So 17 or 18,000. If you do just a 2-1 buy down or just a 1-0 buy down, those are even cheaper, right? In this case, 3-2-1 was the play. Now we've got a $7,000 total payment, taxes, insurance, everything included in year one. In year two, we've got a $7,600 payment. Year three, $8,335. Here's the things that this buyer and me and my team are excited about. You're going to have a lower payment, more cash flow, more runway in these first 3 years. Everybody can see that. If and when you refinance, nothing's guaranteed, but let's say after 2.5 years, you're able to refinance into something conventional, lower or remove this mortgage insurance, which is $700 a month. It's pricey. Whatever's left from that seller subsidy that hasn't been used yet gets refunded to the buyer in a principal reduction. So that $50,000 that the seller gave in credit to fund this buy down, it doesn't just disappear. If it's not all used, it gets refunded to the buyer. So it's a little piggy bank that's supplementing payments for the first 3 years. And then whatever's not used from the piggy bank gets sent back to the buyer. So, the buyer 2.5 years from now, whenever it is, looks up and says, wow, I can get a conventional loan at this rate. I've got this much equity. And then on top of it, gets whatever's left, 10,000, 12,000, 14,000, whatever the number is left in that subsidy, taken off of the principal, right? So anyhow, I loved this deal. I thought it was a really cool way to structure it. Had conversations with agent, with buyer. We talked about it. The subsidy of 50,000. I think it might have been 70,000 in total credit, right? So 117, 70,000 in credit, rather than pay the seller 1-1, which they would have taken because they would have netted the same. But let me show you what happens when you go 1-1. And you've got a 6.25 interest rate. Your payment's $8,700. Instead, 1-1-7-0, structure it like this. Not only did the 70,000 cover this seller subsidy, it also covered the little bit of buy down to get to 599, also covered a big portion of closing costs. So this is how you get creative in this market, and truthfully any market, is you start to look at what's available. Hopefully this was helpful. This is one of 1,000 different ways to do it. It was a real life example that I was really excited about, so I wanted to share. But $330,000 single family purchase, 2-1 buy down, $550,000 duplex purchase, 1-0 buy down, $1 million property. I've got a 1-0 buy down going right now. We've got enough credit to buy it down for a year. So we'll go 6.125, then 7.125. There's so many different ways to do this, but if you don't talk about it, if you don't have somebody in your corner who knows how to do these things, you'll just miss out. So if you want to connect me and my team, go to greatmortgagebroker.com. The good news is we're in 48 states, so most likely we can help you out. Greatmortgagebroker.com. Thanks for watching. Until next time, we gonna see.